Bank, of course, IDFC First Bank, something that Harsh highlighted in the opening show, has also done reasonably okay for itself. And which is why on the bull versus the bear segment, we focused on that one. Now, Harsh, interesting because it's not necessarily always had moves, but after doing that fundraise, if I'm not wrong, or a pref allotment or whatever they did at the price of 60, the stock has actually had a fairly decent return in the last 2 or 3 months.
It has, Neeraj, 25% from there, in fact more than 25% from there. So that seems to have been the bottom of sorts, at least for the moment. Let me not call it too quickly, but let's quickly pull up the bull versus bear. And the first point essentially is OPEX. OPEX has been elevated for IDFC First. Their cost to income is around 72%, which is quite high. Compared to peers, something like an HDFC has 40% cost to income odd. So that's quite high. Even if I look at it cost to assets perspective, it's 6%. So that's obviously elevated. And the last, in fact, when I'm looking at the 5-year period, cost to assets has been anywhere between 5 and 6% for an IDFC First. So it's quite elevated, but that also leaves it with a lever. If that were to come down, you'll immediately see an impact on profitability and ROA. And that's my first bull case. Can that change? But I've already kind of brought out the bear case here. The last 5 years, they're used to this very elevated cost to assets or cost to income. And that really is, they are finding it difficult to shrink that. At least that seems to be the case at the end of FY25 and what the commentary suggested. Now let's talk about the bull case on the second count. FY25 has seen a sharp spike in credit cost, 2.5%. Highest credit cost number since FY22 that we saw in FY25. That though is past us, and likely can we start to see a shrink from here is the question. And maybe there is, because Q4 there was a slight bit of shrink with regard to credit costs. Again, the question therefore is, the bull case question is the worst over? The bear case question is, could the pain continue? Let's go on to the third piece. Margins to be least impacted by the repo. This is basis the Investec note today, which I was going through. Margins among all private sector banks, IDFC seems to be the best place in terms of margins. They will protect their margins in this repo rate cut. But loan growth, which used to be elevated, 25, 30+% sometimes, has slowed down to 20%. You want to keep your eye out on that loan growth. Could it dip further? That could be a downside surprise if that were to happen with regard to IDFC First. Let's talk about valuations now. It trades at 1.4 times 1 year forward, which is in line with the 5-year average. So a positive, because you might see a cycle turn, right? You're at the bottom at this point, and you're at the 5-year average in terms of valuation, so not too expensive. Could you see an upside from here? Possibly, given the kind of valuation it's trading at. But it trades in line with competitors, so you could well see other competitors as well and compare valuations there. And if you're finding favor with another competitor, that could well be something that buyers will look at. Now let's look at how the analysts are looking at this. 15 buy calls, 5 hold, 5 sell. The average return is negative 5%. You want to look out for that. The stock has run up quite sharply. 73.58 is the average 12-month target price. Let me go across to Sudeep. Sudeep, do you have a view with regard to an IDFC First?
Oh, absolutely. We like the stock. In fact, even it was correcting post that preferential allotment, which they did, and there were a lot of negative publicity, we were positive. And we believe that 90 is a target for IDFC First at this stage. They have significant scope for improvement, and you're absolutely right. FY25 did see actually the worst possible credit cost and the scope for significant improvement, which is happening as the economy is improving. Also, the microfinance asset book, where they took a lot of hit, I think things are improving quite a bit there. Cost to income ratio is going to improve. That's what I understand from the management commentary in the last quarter meeting. So overall, we are positive. It's got a steady, stable management with a very clear focus on business. So we are positive here.
Okay, Kush, do you have a view with regard to an IDFC First?
First, from a momentum trade perspective, yes. I mean, otherwise the stock has been one that has disappointed the street, every now and then. But right now, if you see, it's got a few things going for it. There was a falling trend line, a falling channel resistance that it's broken out some time back, and it's building onto, those gains today. Also, you're seeing the stock up on the back of good volumes. I think from a near-term perspective, also, you could look at an entry for targets of 81 once at the sticker out, and 85 as well. That happens to be a bit of a stiff resistance. So yes, from a momentum trade perspective, you could well consider IDFC First Bank and keep your stop losses near the 72 mark.
Okay, so but that's on IDFC First. We